Hi trader, have you ever wondered what is the best candlestick entry? Today I'm going to check out the pin candle versus the engulfing candle. We're going to have a little look and see which one performs the best over a series of trade. Now, just to kind of cut time down, what I'm going to do is I'm going to go through the past sort of 20 examples. We're going to use one chart only, one time frame. We're going to have a little look at both the engulfing candle and the pin candle, and I'm going to basically look at a 2-to-1 risk reward ratio and see which one comes out the best at the end of it. Now, the reason why I'm doing this is because traders really try and overcomplicate how they enter a market. Some people wait for the perfect piece of price action before getting involved, and that's not a bad thing, because being patient in the market is a very, very rewarding trait to have. But the other thing is, it can entice some fear. If they don't see that particular move and then they miss out on a move, they may then get emotional, and fear of missing out may induce them to try and get involved with the market when the opportunity could have already gone. So what I want to do is just kind of break down to you the pin candle, break down to the engulfing candle, and then we'll have a little look at which one comes out on top. Now, just to kind of explain what is an engulfing candle, or the rules around an engulfing candle. Let's say this is just some candlesticks and we are moving sort of to the downside. So a bullish example of this, if I just put in a couple of lines as well, we're going to do this very abstract. Okay, so if I just put in a couple of wicks in there, let's say like this, and we're moving to the downside. An engulfing candle, the way I like to look at an engulfing candle anyway, is a engulfing candle, the body will overlap the previous body and close above it in a bullish case. Okay, so let's say we open on the close there, the market rallies to the upside, and we get a close above the previous candlestick high. Okay, so what we want to see is a break above the previous candlestick high. What we also need to see, obviously, is the market wick down first. It needs to engulf the previous candlestick range. Okay, so this is a bullish example. So if we see one of those, what I'm going to be looking to do is basically buy above the candlestick high, put my stop loss below the low, and I'm going to look for a 2R trade. Okay, that works the same way for the opposite. If we were to see a bearish engulfing candle, let's say that the price has been moving to the upside, okay, just like this, and then price forms an engulfing candle. We get a large bearish candlestick which engulfs the previous candlestick body and closes below it. That's what I will be looking for short opportunities. We'll short the candlestick low, stop above the high, and we'll target a 2-to-1. The reason why I'm going to be targeting a 2-to-1 is because we only have to be right 50% of the time to be successful in a 2-to-1 risk reward ratio. Now, if I just grab, oops, that's the wrong button. If I just grab all of these, and we could just kind of delete those like so. What we're going to do is also look at pin candles as well. So pin candles are quite a popular trading piece of price action because of what it kind of represents. Now, if we're in a downward trend and we see sort of like a bullish candlestick with a sort of long wick to the downside, what that can represent is that sellers have become exhausted, buyers have stepped back in, and it could show us a really good turning point, especially at key areas of support and resistance. Same thing for the resistance. If price was trading to the upside like this, and then we had a break of that area, and then sort of like a close like this with our wick to the upside, it would show us that there's potentially buyers are becoming exhausted and that sellers are taking over. So the pin candle is a really popular way of getting involved with the market. What I want to try and test in this video is which one performs better over a 20 trades. Now, 20 trades isn't a lot. What I would say is, you are interested in this further from this video, you want to go and back test this for yourself and at least do 100 trades per one. But because we're working on limited time, I'm going to do 20 trades. Now, also, comment down below, which one do you think is going to be the best performer? Do you think it's going to be the pin candle? Do you think it's going to be the engulfing candle? Be interested to see your thoughts. So let's get straight into some price action then. So I'm going to remove all those tools, and what I'm going to do is I'm just going to go back. I'm going to pause the video here, go through 20 examples, show you those 20 examples, and then go from there. So I'll see you in a minute. Welcome back, traders. So I did the 20 trades. Now all I did was look at pound yen daily chart. I had no bias whatsoever. It was no sort of, is it going to go long, is it going to go short? No other technical indicators to help me choose a direction to help with the performance. So if you were going to look at this from a longer term point of view, you could obviously add different types of indicators, or you could look at adding a bias, you know, from higher time frames maybe, in order to maybe make this strategy a little bit more efficient, or this piece of price action a little bit more efficient. But out of the 20 trades that I saw, we had 12 winners, 8 losers. That gives us a 60% win ratio and a 16R return if we're going to trade at 2 to 1. So to be honest, that's not bad at all. That was from a period from now, which is the 11th of October 2023, all the way back to the 24th of August 2022. Now I might have missed some within that. Obviously I worked backwards rather than forwards, so I was trying to be cautious of including other sort of things. But you can see there's an examples where we had a really nice bearish move there. It just didn't reach the 2R targets, so I let that run. In hindsight, you may look at closing some of the position down, or you may look at bringing stops to break even if you go to a 1-to-1 and things like that. So there's definitely scope for you to expand on this piece of price action. But I think out of 20 trades, 12 winners, 8 losers, I don't think that's a bad at all. So now I'm going to do the same with engulfing candles. No bias whatsoever, just a daily chart, just an engulfing candle as it appears, and I'll see what that results in. Well, this one shocked me a little bit. We've got 20 trades using the engulfing candle. Again, I didn't use any kind of bias in this. I just looked for an engulfing candle, looked for either the buy or the sell, depending on what it closed as. And we've actually got only 6 winners out of 20 trades, 14 losers. Gives us the win ratio of 30%, which actually comes to a -2R result. Now that may differ over a longer period of time. If you went and tested 100 trades, it may come out as a positive result, but from the quick back testing that we've just done, it shows us that actually the pin candle is the winner. If you want me to test the pin candle versus a different type of candlestick entry, comment it down below and I'll check that out. Thank you for watching this video. I hope you found it insightful, and I will catch you in the next video.